What's up? Let's go. Let's go. Good morning. Great to get started here. Market looks open and rational. We're out the door. Ooh. Nice start to the day.
Talk to me honestly. I'm here.
Joining everything together today. Let's look at our D bands. Let's see what we have. So Friday, if you guys are here for the saga, I pulled ahead for a win for the end of the day. That's how we do it.
Looking back.
We started really soon here. I'm trying to get these together. Low SPY, 406 and some change. Oh, we're down here pretty low. 406.36 for the low. So Saga Friday was great. This is what you learn. Don't trade when irrational with larger positions. I did get in a little early. I did say all day, I know I'm right. I know I'm right. All the data told me I was right. But, you know, that's famous last words that people say. I was red, then green, then red, then really green, then red, and then green. That was the saga of what I like to call Friday fun time. Irrational from the start, as we know, we talk about SPY. We had a hedge switch break right out the door. We did a huge, massive lesson on this one. We had a catalyst, of course, from the non-farms. And then from there, we just had a hedge pressure break, and it's just irrational the whole time. I took some scalps off of here. I took some scalps off of here. And then at the end of the day, I said, I know I'm right. We're going to pull back because resilience is telling us that was going to happen. Although being irrational, resilience was likely delayed. You assume the worst. You can't assume that's going to be rational or rationalize it. But it was actually not just negative, but NASDAQ was at zero all day long while we rallied up. So you knew not to trust it. Either the stocks were going to rally to catch up to it, or NASDAQ was going to fall and snap into it. Either way, I was going to hold on to that bet, and I was going to exit right when we left that close price on SPY. And I was trading QQQ and S&P at the same time. Just trying to hold one, scalp the other. Today is likely going to be a no trade day if we open irrational, which looks like we're getting ready to. We've actually touched the band. The window of opportunity is closed right out the door. On the S&P at least, and the NASDAQ looks good in there as well. So I'm trying to get everything prepped and ready to go for the morning. I'm going to be on a Twitter space, so we'll be back and forth on the mic, but we'll teaching there everybody to hang time. We have some massive, major news going today. It's going to be super dope. Y'all going to love it. Let me get this going here really quick. I'll be joining some friends today at Wolf Financial Crew, of course. 10:30. Oh, so they start right at market open. Okay, cool. Okay, so I got 15 minutes. Cool. All right. Smash that like button if you guys. Oh wait, hold on. Hold on. That'd be helpful if I open my trading platform. That'd be helpful. The P&L's posted in Discord. I ended up pulling ahead, but man, I traded a lot that day. Oh my gosh. I went back and forth a lot. Oh, again, this is just kind of like, you know, you're overeager, you're on a streak. And then the rule is when irrational, either sit out or you trade very, very, very small, like a micro or two. And I followed none of those rules. I traded my normal size. I didn't over leverage. I traded my normal size. But relative to what I should have been doing, of course, as I said, the first thing at the open was irrational day. I'm going to sit out, and they go, you know what? I'm a believer in this because I see all the data. I'm going to take a short. And then I just got in too heavy up front instead of doubling in at the right spot. I decided to fight for it to get out. But eventually I got the trade I wanted. You know, skill, luck, whatever you want to say it. It's probably a combination of both. I know how to maneuver losing trades and losing days. But still, you could have done a little bit better, Matt. Damn you. All right, so a lot of stuff's happening. Huge ups for Rocket Scooter this week. We have about 4 things launching. 4 things. Huge things. Make the announcement today. Oh, wait, hold on. Wait, where's the camera? Okay. Sorry. Trading platform, front center. Forgot to open that this morning, so I had to turn my camera off for a second so you guys could see that my password was. I love My Little Ponies, you know. That's my password. Don't tell anybody. Just kidding. No comment. Never owned one. I was a Transformers kid myself in the 80s. That's what I liked. And He-Man. Had all the He-Man toys and some G.I. Joes. It was a little mix of all the good 80s toys. All right, so it looks like we're opening near the bottom of the S&Ps. So we are currently on the SPY. Were we also here at toys as a kid? Also Legos, and I'm not gonna lie, I kind of still play with Legos. I don't think this is right on the DD calc. Let me see really quick. Let me go to our Discord where we have the DD calc set. Yes, it was. I was actually a Ninja Turtles person, and in case you wondered which Ninja Turtle I am, could you guys take a guess? Probably pretty obvious which Ninja Turtle I was. Which Ninja Turtle my sports star, professional baseball player, jock brother, cool kid was. So obviously you can guess, and it really much fit both of our personalities because we were on point with both of those turtles. My brother was Michelangelo 100%. My little brother was like the popular kid. See, I was a math nerd, right? My little brother was like big man on campus, sports jock. And I always joke, and I was like, I was always the kid with the long hair. You know, I was in middle school, I was a punk rocker. This kid with long hair, had a mohawk, you know, had like punk rock t-shirts and stuff, and I was the only geeky math club kid that was a punk rocker that you know, could go to the cool kid parties, but it's because my brother was cool. And I always joke that my little brothers didn't get shoved in the locker. So no, but seriously, I came from a cool town. My town was pretty chill. Well, I was Donatello like 100%, and so I have a picture. I'll find it for y'all. My mom actually made handmade Ninja Turtle costumes for us. We always would enter like at the church when we were kids. They'd have like costume contests and stuff. My mom would hand make everything. She made handmade Ninja Turtle stuff from scratch. I mean, from scratch. She knitted like turtle shell. I mean, she like sewed together these like turtle shells and stuffed them full of fluff. So I like slid into this like real fluffy big turtle shell thing. It's Donatello. My brother was Mikey. Oh yeah, it was great. Trying to see if we have the conversions. Let me look over here. And I actually embodied like straight up Donatello because I was the gadget guy. I was the engineer, the one who always built stuff. I took apart my dad's VCR when I was a kid. And he says in my defense, it's because I shoved something in there and I started trying to dig it out to get it out, and then I started like getting curious, so I started taking it apart. And he had to stop me. Okay, so is that 49? Let me find. Yes. Oh, 406.7. Does anybody have the... That is not the... Let me try this really quick. That is going to be 4116. Oh, I know why it's doing that. Can we open in 9 minutes? Okay, so this is going to be 41. Okay, I have to do these really quick. I put them in the wrong spot. 4146. 6, 17, 25. There you go. Probably no trades today, so it's gonna be great. We're gonna talk about the market and look for other opportunities and see what we got as far as anything that's worth talking about. It's great to wake up and be like, nope, no trades today, right? 4924. And the other DD band is 41520. Are you guys tuning in live? This is real trading. This is a real small account challenge. I've done these before. The last one I did, I was on a 70-day win streak. That's the thing. Here's how life goes, right? I know life is full of a bunch of, variety of life, right? Things to do, things to buy, things to see. Rocket Scooter, we're a trading platform company. I'm a live trader. I just trade. You can see it. You can judge it on the surface of what it's worth. Love it or hate it. I trade. Show my net lick. Show the account history for the entirety of this challenge. And let's be reals. Let's be realsies. It's the only person live streaming on YouTube that shows historic with an account number next to it to prove that it's real. We got a world full of sim traders, a world full of, fake it till you make it. But my instance, I just do my thing. I trade. Love it, hate it. Can't argue with it. It's real. There's the account number. You can actually log into my account and make trades if you want to. You can steal the money. Like, I don't give a fuck. I'll just put more money in. So for the sake of letting everybody know. Real trading, and that's what you're here to see. If you're going to see some real trading, trust the process if you're first time here or whatever the case may be. I'm not going to lie. We really know what we're doing here, and I'm pretty much like, I'm okay. I always tell people I'm like okay at trading. You can watch and be your own judge. We'd love to be cool here, accepting of all people and their trading styles. So you are all welcome to show off new styles, teach us new things. We're all interested in learning, and y'all can join me on the journey. What's up, Itai? What's up, John, Garrett? Good morning, Sam, Michael, Justin Howard, Grand Rising, my friend. Marius, Joe, Rubber Band Man. Good to see you, man. Where'd you post in Discord? Thank you. What's up? Hey, Maddie B. All right, again, we're going to go at 25. I'm going to start off just a little bit. Markets are rational out the door. Let's see if we got anything. We'll make sure the first things we do get our liquidity maps out. Let's talk about earnings calendar today. So, we got anything coming that's anytime soon? We have Activision. This is a small day for earnings. Let's check out tomorrow. Tomorrow's going to be slightly bigger with energy. You got BP. I think a couple more places. No, DuPont. Phase. It's not a lot of heavy market cap. Till middle of the week. You have some bigger ones. Disney's always a fan favorite. L'Oreal, CVS, Uber. We all went through mega cap week, so all the bigger ones have kind of gone through. Wednesday, Thursday are going to be slightly bigger than now, of course, and that's something worth noting. Let's get the calendar front and center. We can look and see what's going on. Where's everyone chatting in Discord bartending? Just go to our, oh, by the way, go to our Discord if you haven't been there yet. Go. Go here. Wait, that's not the right one. Well, I mean, that'll get us there, but that's not the right. That's not the cool link. There's the cool link. Real quick. Have to share the stream. Y'all are just tuning in. We love you. We love you tuning into this to the challenge. I'm gonna turn 10K into 100K for your very eyes. You'll see every side on the account. I was on 100% win rate until Friday's antics, and I'm in like the high 70s now. But either way, pulled ahead for a win, so the streak continues, which is great. Okay, let's go. Okay, let's see what's going on this week. Nothing too big. Powell speaks tomorrow. Some housing data for Wednesday. It's gonna be a light week on the news. Thursday's gonna be important, obviously, to go back and continue to push on that technique that we use to forecast inflation and kind of guess the Fed's hand. I'm in the boat that the Fed's gonna cut down to 0 rate hikes. Zero rate hikes this next meeting. It will be 0. That's my call. We're gonna push to 0. If not this meeting, next weekend, no rate hikes. We're gonna freeze. The market is showing very disgusting signs of bearishness. I made a tweet about this a month ago. I pinned it, but I unpinned it when the challenge and I put it back up there. The tweet is still there a month ago. I said bear market is brewing. I want to see some COT data. Now the COT data is delayed for a little bit. CFTC put out a release for that. We'll hopefully get that data when it comes through and take a look at the new setup. But this liquidity build, you're getting more buyers, more sellers, like people are shorting and market makers are negative. Anytime you have this kind of spread like this, it has in the past shown periods of volatility, so you have to be very careful. If the buyers on Friday, that was a short squeeze and you see the blue coming up as opposed to the green going up, once we get that tick, I'm going to be a little nervous about the market. If Friday was a genuine buying spree, I might be a little bit happier going into what's going on now. And this downward push today in the overnight session, the Nasdaq is opening irrational, so keep that in mind. QQQ, right at the cusp of the doomsday band. This comes from our Rocket Scooter platform. I got these little like tools here on the side just to kind of mark my irrational stuff for y'all when that comes out. Good morning, BRSU. We'll see. But you know, we're gonna still be up hopefully because we're gonna be U for up, right? So we'll probably still be there because you know the S&P still got that. It's not really very bearish yet, you know. VIX is hugging that triple B, so I gotta be very careful at that 20.3. We talk about this triple B level. If you guys mark this on VIX futures contract, 20.3 is the VIX level to watch. Huge pivot action there. Everybody, make sure you click the like button. Click that like button down in the bottom right-ish corner of your YouTube channel platform. So we'll love you guys to support that stream effort here. Rocket Scooter did have a new release in the overnight. Just got informed of this. It's all going to be site-based, and the Rocket Scooter's new product, the Light product, has come out, and that's been released. Talk about that later. And of course, other cool, big, awesome features coming through. Let me get ready to get on this space really quick. Space time. Okay, market is open. Let's go. Let's take a look. Data's coming through, you guys. Love it. We did open not irrational. Everything open nice and rational, which is good. Actually, I do like what I see. Let's get our data coming through. Res is nice and positive. Let's get some of these numbers here. We are trading in the distribution zone with resilience positive. I do want to hopefully see, looks like we are in a liquidity pocket. So this is random on top of random, if that's the case. We have the hedge pressure data to come through and take a look at some of this. Let me close these walls down. Upper DD band, again, touch date. We'll have to see. Yeah. Wait for the data to come through. What's going on here? Let me try something really quick. Hold on one second. Let me reopen my platform here. Oh yeah, here we go. I forgot I need to refresh my token. We had an emergency release. This is not something we normally do here in the middle of the night on a Sunday. Okay, sorry. All right, let's go. We do have the data coming through. Where are we trading right now on SPY? All right. There it is. Okay, there's the old red lines. So it's a BRSU. Let's get the liquidity pocket front and center. Yeah, so when we have a release, you have to like refresh and open up again. BRSU right here. I don't know if I still want to do it though. Hedge pressure is resistance for 11.5. Any upside target from This particular setup would be to trade through the redistribution zone. We're out the half gap to hit that hedge pressure and turn around and come down. So again, this is not the most bullish of setups today. I don't think I like it. As a matter of fact, with this resilience being kind of booty, like right on the edge, right at 0. This could be a resist. So longing from here to there, resistance from there to there. That's pretty much all I can see today. Let's double check QQQ and VIX for the 3 rational rules for these setups here. BRSU and QQQ, pretty much similar setup. There's that BRSU is going to be resisting off a hedge pressure just the same. Of course, UVXY, let's take a look and let's do some things on the scanner. Let's try to find some... let's find some things right on the edge here. I'm going to show you guys a trick. So if you do this... let's go ahead and do hedge pressure breakdowns and monthly hedge pressure breakdowns. Nothing there. Nothing there. So, okay. All right. We're zooming up. Redistribution zone. Remember, 5 right here on UVXY is going to be that problem area. Let's take a look at. Yeah, right at the redistribution zone. Resilience on SPY is negative. So remember, we did have an irrational tap earlier in the morning. To be very careful on that negative. Let's move this out of the way. Negative resilience has this being resistance today, so I'm thinking but it's like we have a red line to interact with on the downside here, so I think I like that. Yeah, res is getting more and more negative. Let's go ahead and take that. Small, remember, we're gonna do what we didn't do yesterday. We're gonna play the irrational on the small side. There is a red line. Let me double check where that is on the S&P futures. Did we tap that overnight? Hold on one second. Just a small one again. I'm a little early on this, but make sure this resilience stays negative. That S&P is going to pull that NASDAQ down if it goes. Let me find where that level is. I'm going to pull that up on the side here. Just something small. Remember, these irrational taps I don't really get super excited about. 4105. Oh, that was the red line. Okay. So as far as this goes, this is that little bit of a tap here. And we did hit that in the overnight sesh. So just something really like a super, super small, right? I'm going to build 3 here, and then 3 more there to have the things. Yeah. So I'm a little early just on this resilience. I know I need to get some better entries here, but the last one's 411.15, and then of course we escape out of this bear zone. Anytime the markets do open irrational, right, we're going to see that the S&P itself, SPY, is going to likely not lead the market, but man, it is very negative. It's at 20. I do like how bad that looks. Looks like we're having our data is frozen. The new release might have not taken on accident, so we're getting a timeout from our team. Timeout error, so they may have broken the app today with the new release. So we'll look into this. So anytime markets open with irrational taste, like we open below this TD band in the morning, then resilience being an arbitrage indication that shows the difference between the index and the rate of implied hedging of the stocks inside of it. Resilience not necessarily leads the market or lags the market. You can't determine. It's indeterminable is what irrational means, indeterminable. You can't rationalize that the stocks will lead the index first. Looks like I think we have a data outage today because I have 0. Let me double check. Looks like the data stopped pulling for some reason. We had a new release last night, and so there could have been some error, but we are contacting our folks in the server. We're in the process of a large push to migrate our data and our server data to a new custodian. So there's a huge project going on the back end as we revamp all of our stuff to prepare for. Ready for this, guys? Drumroll, futures data. Futures data. You'll be able to trade futures through Rocket Scooter in about a month. Ooh. Ooh. So we're actually migrating everything over and working on stuff. We may have broken the app on accident. So let's see. There's that S&P half gap resistance off of resilience going negative on the S&P. We need to find ourselves a downward target today. There is that 4062 red line support, which is impact red line off of that big Wednesday FOMC move. So if we do trade down, we just trade down to Canadian touch. Look at my small position, $100, whatever, right? There's that scalp I like to see. So right at the DD bands, again, this is just what I call the career trade. You get that trade from here to here. It makes a whole lot of sense. Let's close it out for the win. Just something small, right? Put $50 in my pocket. I know it doesn't sound like a lot, but to do trades right, it's all you have to do. The career trade doesn't have to sit there and gamble and click buttons like you're playing Galaga, like it's like you're in a fucking Pizza Hut in the 80s. You know what I mean? That episode of Futurama, remember that? Where he's like, it's Saturday night. He's like, I've got no girlfriend. I've got a 2-liter bottle of Shasta and my All Rush mixtape. Let's go. He's in there, he's playing like, everybody like Futurama here? I'm a huge Futurama fan. You don't have to sit there and buy, sell. Like literally you make your one, I call it my career trade. You make one trade a day. That's it, your day trade. You get in, get out. Small. Markets irrational, didn't take a big move, but trading from half gap to here is pretty textbook. We're getting resilience, not necessarily leading. Once you have irrational, the qualifiers, we call it Rocket Scooter qualifier, means that something has to qualify for you to take action. So the qualifiers of resilience to lead the market, which is almost 90% of the time, stocks will move before the index moves, is that the markets don't open irrational. Futures move too far, too fast. The index products themselves will get hedged a little heavily. So you can't anticipate that the S&P moves before the stocks. So in this case, resilience shows that the stocks did move before the index, which is the normal rational behavior. But you don't bet that the rationalization's there. Anytime you're irrational, which means anytime I pass outside these green bands, I assume the worst. And the worst is the opposite of what's going to happen. If I want it to resist, I have to assume the stocks are lagging. So the fact that it went lower and lower is giving me confidence to jump in. If it's hugging zero, that's what happened on Friday. You're going to get stuck for a while. It's definitively below zero. Like this and goes down to like negative 30 or 40. That's pretty strong. But because NASDAQ is not so strong, I'm not going to hold the short for a big sell-off. I just took a scalp from here to here. But because it was irrational, I mirror my position size according to my confidence. If my confidence is low, my position size is low. Again, you're watching a career trader trade. This is 8 days in a row. I haven't had a losing day yet. And the last time I did a small account challenge, if you guys didn't know, like the stream, I won a 70-day win streak for 3.5 months live on YouTube. Oh, here's the data. Finally come in. I didn't lose a day for 3.5 months streamed live in the same way with an account number on the screen. This is my Ninja Trader Tradeovate account number. It's real. Started with a 10K balance a little bit over a week ago. I'm up to almost 12K. That's 20% of futures account trading. I've won every single day. I've only had one red trade period, or one day where there were red trades period. Let me start over. I had like maybe 3 red trades on Friday, but I ended up turning the win into a loss. I mean, the loss into a win because my thesis on Friday I'd actually be right. So I kind of lucked out on that one, but resilience was just so damning. It was just delayed, right? And that's what happens when you're irrational. You get those delayed resilience. We had a hedge pressure break to the upside, which is one of our major rules that tell us not to trade. We've revamped the entire program. If you guys have not seen the Discord yet, everything is changing. So I'm gonna let you guys know I have a huge news. I want everybody like that stream really quick. Click that like button. We've been growing faster and faster. Our stream has doubled in size in just like a week. I don't know. There's something about when you show a real balance, right, on a screen, and you show an account number and all this stuff. People like. What happens is there's a lot of people out there that don't do this, right? They wish they could do this and they don't do this, but they try to sell you a product anyways. So I appreciate those folks for directing traffic to my stream, because people come and like a magnet, they're going, wait, this person's actually trading and they're showing the history. What are the stats? Like what's your win rate, Matt? And like, oh wait, I can see that too. Oh, there's a P&L channel. There's a history, the burger statement history. Oh, and they go, wait a minute. I've never seen that before in history, like multiple days tied together for indefinitely. I said, yeah, this will either go to 0K or 100K, and you will watch every step of the way with the history. And people go, huh, that's weird, because there was this one person saying something. They said, I don't like you, blah blah blah. And I was like, oh, are they a trader? Well, yeah. Are they selling something? Yeah. And I go, well, bingo, there you go. It's hard to sell something when you're a paper trader, I'm sure, but it's probably really hard to sit in the shadows and watch someone succeed and trying to figure out how you can do it without actually trading. There's no way to SEO yourself to a seat at the big boys table. Because you don't really trade. People don't really, you just got to sell, right? You got to sell so hard. 77.5% win rate was the actual, I'm looking for the stats while I'm talking. I'll pop up the, I'll pop up the new P&L at the end of this day. So this is another winning day. I did take that short. I might take a NASDAQ short to go with it. That resilience is still looking pretty great though. Let's get NASDAQ front and center. I do like it. We are breaking through the S&P on the downside, QQQ. So this is my, now don't let this fool you. This is the actual stats from the gain. This is the gains. So 0 is where we started at 10K. So I ended up crawling to about 11.6 and I lost almost $800, I think, like, or $900. And I went ahead for the day. So this isn't like the account. They'll be like, oh, Matt lost half of his account. No. Matt lost about $1,000 on an $11,000 account. So my drawdown's about 10% maximum. I allow that. I think maximum open drawdown, I was probably closer to like almost 2K because it got irrational really quick. But I ended up pulling ahead and I ended up making about, looks like $1,300 on that one trade to get ahead. So that's pretty good. At the end of the day, 178 contracts have been traded, 90 trades together, and then about, 7% win rate. So I'm going to show again the history of the stats. This is this year's broker statement. I will show this year's broker statement. As a matter of fact, I commit to showing this year's broker statement for the course of the year. So you guys can stick around the stream. It's the only live trader, period, on planet fucking Earth that will show you a year broker statement. And you watch me grow it over time. Just watch. Hate it, like it, but you can't argue with the numbers. Numbers are numbers. Hell, I don't like me sometimes. I'm kind of a loudmouth hothead. No one else does this, showing account number and P&L. Nobody does. And when they don't, they just wonder how they can compete. And the only way they can compete is anger. It would be really great if we did grind. I love it. Okay, so now it looks like the data came in. Let's see what a data freeze today. DD's 0.88, but remember, we already hit that lower band and we're opening irrational. So when you're irrational, let's check everybody. I want y'all to play a game. If y'all have learned anything with Rocket Scooter, let's use this as an educational moment. All right, we are technically speaking on QQQ. Let me go ahead and put these in the right spot here. I think this is like, and I love all of y'all. I love y'all so much. Let's see. Thanks for supporting the stream. I really like doing this. This is really fun because what it does, it makes trading a little challenging for me as well. It's hard to just sit here and trade, right? In general, anybody has a hard time trading. Imagine trading in front of a live audience of folks, right? It makes you really double down on your making sure you don't screw up because people are watching you. I also have lost my voice, so apologize if I sound like not my usual. Let's see my upper DD bands on QQQ. This is a rational side on that, 12,508. I'm sorry, through 8.7, give or take. Through 3.4. Now, how did I make that trade today? I'll detail that in just a second. And why am I sitting out? Because I'm not really sure what's going to happen. Let's be straight up on this one. Okay, I'm going to test you guys. Guys and girls, get ready. You want to learn. We have rules when to sit out. Rules when to sit out are called irrational. There are 5 of them. I used an analogy in my Discord training. So revamping the entire process here. There's now a 6-week training course. And I'll extend for one more day because somebody might have missed the announcement. We have this thing, right, where Rocket Scooter, it's a trading platform. You're going to have, as the years go by, right, we're releasing all kind of features, widgets, modules in this platform. We have 2 different pieces of software, the Lite app and the Classic app. And the Lite app was released today, by the way. I'm sorry, the Lite app and the Pro app. Rocket Scooter Pro, that's what you're seeing on my screen. The Lite app is a condensed mobile-friendly version. You guys can have all the same data, but without all the charting, scanner, and all the other tools that come out, like journaling, playbook, the full platform stuff. We have a condensed version called Lite, which is kind of cool. I'll show it to you really quick. It's very similar right? So for if you guys want to check out the light version, we have a deal for this. It's $35 a month to get the full experience of the Rocket Scooter and all the same data. Let me actually put a date in here. But the light app is kind of cool and different because you might just not be an active trader. You might just want like a mobile friendly thing. And you might say, what's the hedge pressure of Apple? Like, I own some Apple in my portfolio. I want to see what it is. And then you can just pop out your phone, run the calculation, and go, oh, Apple's 411.5. Get the numbers in the morning, move on with your day. Light app also has the doomsday ratio. It also has the resilience charts to come with it, just so you can measure and see on the cuff. So I invented this. Original was my first app that I ever built. What's cool about this is I remember myself when I used to be an intern. Who here, let's play a game. Who here has a day job and still trades? How many of you are sitting in your office right now with earbuds in, listening on your phone or trading? Just a show of hands. Right? Who here, and it's okay because I'll tell you something cool. I got some really cool stuff. I'm inventing things for trading platforms that have never been invented for trading platforms for people that work and trade. Okay. All right, all of y'all. Okay, so let me tell you, I love all you guys. Let me show you something. So when I was an engineer, right? When I took my tour into trading, it was 2010. You may look at the photos or the pictures of me online and be like, oh, who is this kid that's trading? You may not know, I'm about to be 42. I just, I'm kind of an old guy. In my 20s, I was a chemical engineer. And so, you know how complex your engineering job is, requiring tons of attention all the time. And I remember when I started trading and started kind of like trying to get into my own element as a full-time trader. You know, I started in 2010, but I didn't go full-time until like 5 years later. During the time I was part-time engineering, like working contract job, and then part-time, you know, trading and doing both. I remember trading from my office. So, the worst feeling in the world is being in a trade, right? And of course, back in the day, I used to use stuff like technical analysis, right? And that just, it was so hard to do from a phone, so hard to chart when, you know, from a computer without somebody walking up and seeing that you're not actually working. So I remember the days of like, hold on. So I remember the days of like, you know, having your computer open and people walking by and you're like quickly minimizing it, right? Because they see you're not really working. You're goofing off. You're trading. You're on a trading platform. Also, you know, your IT is going to call you and think you're streaming a TV show because you had constant streaming data coming into your computer. And another thing is that you're in a trade, right? And the trade's just upside down. You're using TA. You know, it's 8 o'clock in the morning. What I like to do is you do your, what you call your morning business. You go take a dump for an hour and a half, but you're really just like staring at the stock market. We all been there? We all been there? Well, oh, you thought I was 35? Oh, that's so sweet of you, David. I love you. I'll tell you. It's probably because I don't have a significant other in my life who's anything but amazing to me all the time, keeping me looking young. What are you rolling your eyes at me for? She's like, no, I don't. I'm so hard on you. Hold on one second. But I remember what it was like being in a trade, right? You're sitting in your office, you pull up something, decide to make a trade, you know, albeit from your phone or from whatever, and then you're in a trade and all of a sudden you got a meeting. And you have to go to the meeting and you're at a conference table, right? You remember those? And y'all been there? Be like, oh my gosh, that's me right now. I'll say that like if that's you. It's funny, like we've been there, so don't think you're alone, right? You remember those days? I do, right? You know, you're sitting there. Where's my, come on. Oh, why is my tool not drawing? Come on, draw. There we go. My pen is not drawing. Okay, whatever. So you're just sitting at the conference table and trying to make a trade, and you get in one, and then all of a sudden your trade's upside down and you're sweating, right? You just feel like, oh my God, oh my God, oh my God. So then what do you do next, right? Well, you're stuck in a meeting for an hour and it's a boring meeting and you hate it. And you're just like, oh my gosh, I gotta get through this meeting. What the heck? My trade's upside down. My trade's, so you're sitting there, you like adjust, you put your leg on your knee, you cross your leg, and your phone is like in your crotch, right? And you're kind of peeking through the triangle that you make with your legs. So like look down and be like, okay. Let me just watch. Actually, why is my my Epic pen is freezing? There we go. Let's just close this out. You know that feeling? And you're sitting there and you're like, looking down and looking down and looking down and looking up and looking down. And they're talking, right? Your boss is there and his boss is there and her boss is there. And they're all sitting there. And you look like a fool because you're not paying attention and everybody can see it. You know, you think you're being discreet. And I promise when you're staring at your crotch every 5 seconds, everybody gonna see it. Y'all been there? Boss is like literally me right now. So the idea was, okay, so, you know, as a trader that's working, you have to minimize your exposure to the market. You shouldn't be day trading every day. You need something to do. If you wake up today and you're like, oh, it's irrational. Phew, okay, today's the day I'm not going to have crotch trading, right? There's only so many times you can take an hour-long dump in a day for somebody realizes you're not really going to the bathroom, right? So the idea is if you wake up and markets are irrational, that's just that one day you don't have to do anything. And so you can say, all right, today's that weird choppy day, I don't have to do much. And look at this, weird and choppy, I don't have to do much. And I took what I call a career trade, tiny little scalp off of that. But the point is like, how would I know that I wake up today and sit out? Every day is a trading opportunity. That's maybe true, but in our definition, it's not. Every day when I wake up today, I go, oh, irrational, let's do something and sit out. But I took one little scalp to just show you something so you weren't so bored here. And I took what I call a career trade. This made a whole lot of sense to me. In and out, and I'm done. And then so if you were like, okay, irrational, let me sit out today, and then you wake up and just don't care and treat tomorrow like a brand new day. And so the whole goal with Rockets here was to create indications that were different. They weren't technical analysis. They didn't require you to stare at the market all day. They're qualifiers. As an engineer would always say, you can't just use an equation without understanding the qualifier. Here's an example, right? I'll tell you a cool story. Crotch trading, love it. Yeah, hell yeah. Crotch trading. All right, couple things. News, I'm gonna tell you another story, but I need to promote a whole bunch of people to do a whole bunch of stuff. You ever want to be a moderator of a trading team? You ever want to be a moderator on a YouTube stream? You ever want to do anything? I'm looking for some people that want to be YouTube moderators. While the bots do most of the work right now, filtering all the garbage and indicator sales, and you come in here and leave their links and all the old, what do they call it? Used to be like all these naughty links that would show up from all these bots come in here and say, you know, click this for like all your, you know what I mean? Like, anyways, I have a bunch of bots now filtering that stuff, which is great. But who wants to be a YouTube moderator? Send me a quickie message in Discord. As long as you're a Rocketscator member, I'll consider you. I want 5 new moderators in YouTube. If you want to be a moderator in our trading community, like I said, we're going through a merger, and it starts today. I'm so excited, so excited. We'll probably get about 500 people dump into our Discord overnight. Make everybody feel welcome. Moderators, your job is just to kind of like, just be cool. And, you know, people might have questions or just kind of shoot the shit, get to know our new friends. That's kind of a thing too. As a matter of fact, that's one of 4 partnerships that are launching this week. Huge ones, huge ones. And that's not even the biggest one. That's the smallest one, but the biggest impact. Size don't matter. What are you rolling your eyes about? Just kidding. She didn't roll her eyes. Why am I always trying to make penis jokes? This is a show for kids. Must be PG rated. PG related here. Mod for you, bro. I know you will. I know you will, dude. My man JG, I got you. Hold on. How does managing moderator? They changed the name of that. All right, I need to look into this. I don't give you. I love you, John, but I don't want to give you power to delete my channel yet. Actually, John's one of those trustworthy dudes I know. It's my boy. We've known each other for, God, how many years, man? I followed the saga of your life, too, man. You always chime in with all these cool updates and stuff. It was kind of cool just to meet people, and John's a cool options trader, man. It's my boy from way back in the day. Okay, so I'm sitting here just waiting. I'm telling a couple of cool stories. So the other thing I'm going to do, and I'm going to make for you guys and gals. So here's another thing I'm going to talk about the Classic and Light app. So give me some cool things that I'm going to make. And here's one thing that you can say is that Rocketscaper is built inside of a browser. Now I do this little trick inside of Windows to where I can actually remove the browser search bar and write all your favorites and stuff. You know, particularly to make it look cooler, but also because I don't want you guys to see what kinky stuff I do look at when I'm not streaming. So I don't want y'all to see my hyperlinks for sure. But at the end of the day, you want your rocket scooter to look like this without the browser at the top, the browser features. I can show you how to do this in Microsoft Edge. It's a pretty cool technique. But either case, this is a browser. And if you want to know, actually, Tradeovate is also a browser. You might not know this. You're staring at a browser right here as well. They built their platform in a browser just like we did. But the cool thing about browsers, you have something called a browser tab. And the neat thing about browser tabs, you can put stuff at the top of your browser tab. And so one of the things I thought of for all of you is to have the browser tab literally display the numbers of what you want. If you wanted to just keep an eye on Apple, right? And Apple's in your portfolio, and you programmed your alerts to alert you anytime Apple had a hedge break or Facebook had a hedge break or something in your alert went off, that your alerts would show up right here in this little minimum space of text while you're working, so that while you're doing whatever work you should be doing, people don't know that you're getting as much information as possible and actually staring at your trading platform in a tiny little piece of text right here. So that's something we're trying to get built for like future things. Is like some of the patches we're going to do is stuff for traders who work and trade, right? Some of the cool ideas I like to talk about. It's just that we're always kind of trying to work in a level of being a visionary to what traders really experience. And we're also trying to hire folks after the merger and other things happen. We're going to pull other people, designers, visionaries, any kind of aesthetic designers or digital designers. We're going to look for opening up to hire more folks. Like our team is growing really rapidly. And just keep your ears peeled in case you ask for resumes. But ideas of like, what's the average everyday trader deal with? And what a great idea, right? Apple hedge break, the last alert you had. SPY, hedge break down, right? Or you have your scanner. Your scanner is like you're searching for anything that's a BLU that breaks your hedge pressure. Every time an event happens, the last event pops up in your little browser tab. Doesn't have to be active to see what it was. Do y'all like ideas like that? This is the stuff we want to think of as we go forward with our platform, is creating things that people didn't think of. Now, TradingView will show you like your stock ticker and stuff up in the top. So in a way, it was somewhat inspired by the idea that you can have your stock data showing at the top, right? But you want to see your alerts pop up here so that you can actually do your work and kind of be cool without people noticing. People walking up, I used to remember like minimize my stuff. Oh crap, somebody's here, right? When we're done, Rocket Scooter will be sending you a Discord message every time you have an alert goes off, or a text message or whatever. Like there's all kinds of features that we want that, the regular trading platforms of the world haven't considered yet. And so these are things we want to make. And Classic app might have some additional features like that, but at least going forward, in that mobile friendly version, you have the ability to just have the data at the tip of your fingers without all the bells and whistles if you don't need them. Now, this is something you need if you want to do all kind of analysis, aftermarket analysis, full, charting, technicals, scanner, watch list, back testers coming out and all the other things, and you want to trade. So within a month, we're going to activate the project to be able to start trading in Rocket Scooter. We're going to have about 150 futures brokers you can choose from, and you just pick one, log in your futures account, and you can actually trade. So those of you that are doing like trader funding programs and all that stuff, will have that ability for you to have a brokerage account connection so you can trade and practice trade here with your Rocket Scooter platform active instead of two side by side, which is interesting because I'm doing my trading challenge in Tradeovate, so I might have to switch that mid-challenge. Let's get 100K before we release that. So probably, I'd actually want to start trading in Rocket Scooter as soon as that's available. It'd be fun. So here's what we're doing. Let you guys know. If you want to try out our software, okay, the full package of our software, it has options data feeds, which will turn into options ladder and real-time options trading at some point. We have real-time stock data feeds, which will turn one day into stock trading. We have futures data coming in a month, and one day I'll be able to log into your futures data feeds. Our full package we call Pro is $199 a month for all the bells and whistles. We're going to open an a la carte model where you can pick which data feed you want, and it'll adjust the price relatively. It'll be close to like 150 or give or take to 100 once all those data feeds are active. Plus, once all the features are active, it go upwards of close to 300. We had this deal where we had the first 1,000 members, which are slowly approaching, that says $99 a month for life. That deal ended yesterday. So you can lock in the full pro version for $100 forever. And so you might be like, oh crap, man. Well, so what is the price now? Well, the price is back to 200. Well, will be as soon as I change it. As soon as I get off the stream, I'm gonna go, because we just released Lite. So we're gonna change all the prices today. So you literally have like until I do that to kind of get in. If you haven't, if you want to like, oh, let me beat the punch. Okay. I didn't get a chance to change it because they released it overnight. You guys can do this deal, or if you're like, shit, I don't want to rush, try this for me. We're doing this really cool thing called the extended trial. And so we had a 7-day free trial, and you guys can play with our tools and like play along and then learn how our style goes. But we have this brand new 6-week program that is training on everything that we teach. Also with the merger, you're gonna get 2 different educations in one, all packed together. And so if you want to learn all the new content, even check out what we have, this is going to be an amazing, amazing experience. For the first time ever, myself and the new leader will be tag teaming a 6-week course that everybody, including our veterans, will go through. And if you're like, that sounds pretty cool, I want to be trained from the start, A to B, we're going to do this thing so you don't have to rush into a $100 purchase, because that's a lot of money for some people, maybe. Okay, so we're doing this thing for $35. And I said it ended yesterday, but it's going to end as soon as I change it, which is today. You have one more chance to do this. $35 a month for 3 months. And it includes all your data feeds. Data feeds. And that's a $600 value. And I want you to go here and you just try. You know, I always say you probably wasted $35 on a lot. You probably have $35 worth of live streaming services you forgot about. I think I looked yesterday. I think I'm paying for Peacock and Paramount. One time we ran a movie at Paramount. I think they've been charging me for the last 6 months. Never looked at that thing again. So what you can do is you can actually be in our group for 6 months. I mean, 3 months. And there's no obligation, quit any time, but it'll charge you $35 a month. And you can go through the entire program in full, everything unlocked. It's the first time we've done this. And it's to give you a chance to have a taste of what our new platform is all about. Huh? Hold on. Yeah, and it gives you time to go through this new program that we've built. It's going to have 2 different branches of education, kind of in the middle. You're going to start with learning rocket scooter stuff, and you're going to branch into whatever discipline you want to go into. You're a day trader, you're an investor, you're a scalper, you want to trade futures, options, stocks, whatever. You can branch into those areas, and then you can learn everything however you want and join the program. And it's going to be a led educational day-to-day seminar. And they're going to be recorded and uploaded. If you want to go through the program from scratch, from start to finish, and a 3-month commitment is $105, $35 a month. So I encourage all of you to click that link and just join it. So what you can do is you'll be able to learn it before you fully commit. So if you're like, I want to learn this new style or learn some new tricks, like this guy today told me this thing called irrational. What does that even mean? You're going to learn a lot of things you've never heard before, because this is a completely different style. So it's not like you can walk in with a lot of pre-existing information that translates very well. So what the idea is that if y'all want to go and start in 2 Mondays is when the program starts. Maybe we should extend the lock-in offer. So the idea is if you do the extended trial so that you're not rushed, I said if you sign up for that extended trial, you can lock in $99 when you do commit forever. When we raise our prices, you'll have that grandfathered in deal that we originally had. So that you don't have to rush, do this extended trial, 3 months for a very light offer. And you can do our full package and go through the whole program and then quit if you hate it. And you can walk away with a lot of risk management tools. You might say, what risk management tools? Why is this guy sitting out, right? How this guy managed his trade when he was upside down on Friday? What kind of techniques does he use? Those are the things that we teach in the program. Again, not that my results are typical or that you can easily mirror them. I haven't lost a trading day yet since I started streaming this challenge. This is day 8, won every single day. And then I chose to sit out 2 of the days, right? Why did I choose to sit out? Why am I choosing to sit out now? I have indicators that are telling me literally to sit out. There are 5 that I have that say sit out. Don't make a trade today. And look what the market's done. You can take these and back pocket them for the rest of your life, no matter what you learn from. That's the best thing. You ever wanted 5 indicators that say sit out today? Don't go take a shit for an hour and try to wrestle a flat market. Do your job and don't get fired. If your boss fires you, cannot pay attention to the meeting, you can be able to fund that trading account, you gambling degen. So get in there and get some risk management tools. So we tell people. Why are you typing capital letters? We're close. We're ready, Matt. We're close to the short. Looking at shorting MES. It's getting pretty bad. That NASDAQ is holding right now, but I don't like what I see. So let me put QQQ up front and center. So we invite all of you to click that button for the extended trial. You can start in 2 Mondays on the guided tour of education between me and the new provider. I'm going to tell you, I've been searching far and wide for years, and I tried to, like even as early as 2017, to find what I call another Matt, another person like me, an explorer, a person that doesn't go through and teach the common, regurgitate the common, somebody that I trusted enough to want to become a student myself, as rare as that is, that everything they say I find to be golden. I find to be worth my time. I find to be something that I absorb addictively. The Discord link, let me give it to you really quick. Something that every single time this person says anything, I go, okay, well, I learned something, or I'm learning something. Click that link right there, get you in. So somebody I would trust, right, with y'all's education. As you know, as much as I was sitting here messaging some of y'all at 4 o'clock in the morning. I got like 2 hours of sleep today. And I have a cold, like a flu, and I'm still up. My commitment to you and my commitment to the platform education is unbridled, and this person is exactly the same. And so in this merger, you will gain another Matt-like entity. A theory crafting, hyper nerdy, super smart, super energetic, super enthusiastic trader who will take us to the next level. You guys trying to guess who it is? Who I know and trust completely to be legit. I've vetted and vouched every inch of this person's being and history to say that they're pretty quality. And as this goes through, I personally will take a seat with you in 2 Mondays and sit right beside I'll be on that classroom front and center because I'm a nerd. And I will take that course myself because I want to learn what's coming with it. So as we go forward with this, the new community is a group of people like y'all. Theory crafters. When I did my introductions, 3 of them were like, yo, I'm an engineer too, man. Oh man, I'm an engineer. Like, doesn't that sound familiar? That sound like a lot of y'all. How many of y'all came out to me, humble, Ali, I'm an engineer, I mean, it's people that want that layer. People that are confidently smart, and they're not sitting there bragging about how smart they are. They just are hungry, and you can tell by the way they talk, they're not satisfied with just the basic surface stuff. And so the idea that I know is that after meeting that community is what stuff can we create together? And that's where I'm excited. Theory crafting with 500 new people that are just like all the Rocket Scooter team. Rocket Scooter is pushing it towards its 4,000th person in our Discord. 4,000. Okay. Rocket Scooter has almost 1,000 active users of the platform. Imagine getting 500 people that are just like Rocket Scooter folks to theory craft and create and come up with the next generation of tools. So if you guys want to check out the extended trial, starting in 2 Mondays, that program's going to kick off. We're going to start from scratch. We're going to refilm all the videos. We're going to showcase all the tools and techniques, both in the Pro and in the Lite platform. And as we refilm and remake those videos, we'll go over all the newer stuff and newer combinations, window of opportunity being the major focus. The 5 irrational rules that have me decide to sit out if I don't like the way the market looks. The random rules that tell me not to trade because the market will be random. The combination of 3 random rules and 5 irrational rules allow me to create what's called a window of opportunity. That's the biggest thing we teach here. And I'm not going to go through a huge lesson, but I'll show you what it is. Y'all trying to guess? Are y'all trying to guess who we merging with? I'm trying to type. Y'all trying to guess? Y'all want to take a guess? Let's hear your best guesses in chat. Let's hear a stream of guesses. You said somebody said black box. I said 500 people, not 5,000 people. If we merge with black box, actually, no. You're saying I know why you're saying that because I'm such a Mel fan. I'm such a Money Mel fanboy. If we merged with black box, it would just be game over for the stock market. Like Rocket Scooter plus black box together. Dear God, what a powerhouse team, right? Shit, their software is great. I love black box. You put me and Mel side by side. Woo! I would resign and let her take over Rocket Scooter. Shit, I'd learn from fucking Mel every day. That's my favorite educator on the planet is Mel Stone, hands down. She's probably a fan favorite of a lot of y'all too. She's great. But no. What do they trade? Tradie ticks. I'm trying to find my new stuff. Wait, what was it? I know I was saying something before I got sidetracked. Let me show you guys one thing really quick. Oh, window of opportunity. That's what I was looking for. Okay. Okay. Okay, so when everybody do your thing, if you haven't guessed yet. Jerome Powell. Okay, so first and foremost, window of opportunity. Let me show you what that is. So the window of opportunity is something that's very important to our trading style. And it's actually more detailed. Now I'm going to show you the picture of it. Actually, let me make a bigger version of the picture that's easy to see. And this is one of the next graphical updates going to come out the platform. When Monthly Maps comes out, this is the next graphical update. Well, window of opportunity is the idea is that when markets are open, we have rules. We have 5 rules that say our markets are rational. Irrational means don't rationalize. The example I use is outer space stuff, or actually use a when Isaac Newton was sitting under the tree and the fable says the apple fell on his head, came up with the idea of gravity. Well, also Isaac Newton came up with the idea of calculus while sitting in a church. Y'all don't ever hear that story either. He's watching a chandelier sway against the rafters. He came up with an idea of discretely plotting incremental change, and he invented the derivative. Those of you engineers love that story as well. So Isaac Newton apparently loves to sit around and dream up shit while he's doing nothing. But here's one thing I sat around and dreamed up while I was doing nothing is that something must go up. Something that goes up must come down. And that is definitely true on planet Earth, right? The gravitational constant's the same. 2 objects with mass are pulled towards each other due to the bending of space-time. And we know that that's 9.8 meters per second squared. No matter what it is, a feather, a bowling ball, you've seen those examples on YouTube, people drop them both. They fall at the same rate. So what goes up must come down. It's a very rationalized understanding of gravity. Rational means logical and plausible conclusions can be drawn from past observational experiences, and it's repeatable. Everything you throw up in the air will come down. And so somebody throws a ball in the air and says, while it's midair, they say, make a bet. You're going to bet that it comes down. Everybody will, right? Because that's the rationalization that you have. But irrational would be the rational that you can't rationalize anymore. If the guy threw the ball up and then it paused in midair and started moving left and right, and then moved down and then moved back up on its own, still not working. Oh, shoot. Okay, by the way, I think somebody's boost didn't go through on the Discord. That's what it is. Here, use this link really quick. Hold on. All right, try to link now. Try to link now. We have a, what happened was our level 3 boost must have dropped by 1. But we have all of our members boosting the server, so somebody may have. So now we are level 3. The link should work again. Try it again, Spencer, one more time. Okay. So anyways, rationalization is what goes up must come down. That's the rationalization. Something's going to happen is going to cause something else. It's plausible, right? It makes a lot of sense because you're on Earth. But if that rock goes left and right and goes up and goes down, just sits there, and then the guy says, okay, make a bet. You're going to be scared to make a bet because it no longer is coming down. Hey, where do you think it's going to go now? Where you're like, well, I don't know. It's doing random stuff. So my plausibility and logical conclusions out the window. What goes up is probably not going to come down. So I'm not going to make a bet. So the whole idea of window opportunity in a rational market is that you throw out your plausible reasoning. If resilience leads the market when things are rational, that's a rationalization. The rationalization is stocks always move for the index. This is 96, 97% of the time. High 90s in our back tests. Some days, some localization back tests, like 99% of the time. Stocks will move, the index will follow in rational markets. So we determinism when markets are irrational. You can't tell if the rock's going to go left, right, up, or down in midair. You certainly can't tell if it's going to come down. So in an irrational market, you can't tell that stocks lead the index. It's not the indicator doesn't work, is you can't tell which direction that rock's going to go. And somebody's asking you to make a bet. So you could choose in an irrational market not to make a bet because you've lost your rationalizations. The idea is that your indications that you use will have, the rules will change when irrational is flagged. Does everyone understand that? Give you a little quickie yes in chat if you guys understand that. I'll answer your question. Okay, so everybody do your best guesses. Really quick, if you haven't guessed who you think the merger's with, type in your guess now while I finish this little bit of a story, right? So again, when you lose your rationalization, you don't bet that once the rock went up, you don't make a bet that it comes down. You don't know what's going to happen next because new data has entered the picture. And your next question is, why is the rock not doing what I thought it would do? Could it come down? Sure, that's one of infinite options of 360 degrees radially in all directions and all coordinates of space that it could go. But you would say, but there's other kind of factors I can't tell. So why should I make a bet when you just proved to me that the rationalization is out the window? So rationalization would be like, if your indicators typically lead the market, once you're irrational, you can't assume it leads the market, but don't assume it lags the market. That's different. Don't assume what goes up continues to go up if it went sideways. What goes up can do infinitely random things. Irrational means automatically random. You see random behavior, you don't rationalize. So what goes up may do anything else that it wants. Why would I take a bet when my odds of predicting it are practically non-existent? Okay, that's the point. Okay, so window of opportunity is 5 irrational rules. What we do when markets are irrational is I don't make any trades. Or if I do, it's very small, like 1/10 of my position, like a couple of micros, like I did today, and put 60 bucks in my pocket instead of risking the whole thing. Markets are irrational, and so I will draw what's called window of opportunity, which is if the market hits a layer where one of our 5 calculations go off, then there is no window for me to trade. So this is a graphical example of what it's likely going to look like. But after a resistance is touched, one of our 4 resistance calculations, again from the program, after 14 o'clock, markets are random. It's a whole different thing to say random. All irrational markets are random. Sometimes markets are random while rational, but random is the same thing as irrational. Don't make a bet. And then in a liquidity pocket, markets are random. Irrational is on hedge pressure breaks, all kinds of stuff. So the idea is that I know inside of this window, I can make rational, logical conclusions. As a matter of fact, I'll prove to you that any of your technical indicators, any of them that are designed to do something, your rationalization, I'm going to long in a 50 fib, that's a retracement. If you're inside the window, it's going to work more than outside the window. The rationalization of people doing something will be more rational. More people will follow the rules. More rocks will go up and decide to come down. That's what rational means. So in the window, it's when markets are not random and not irrational. Then I look at liquidity maps, DDs, and whatever. So certain rules, like if we go irrational, I no longer consider DD as one of my tools I use. I no longer use liquidity map as one of my tools I use. I understand that resilience may not lead the market anymore. inside of the window of opportunity, resilience will lead the stocks over 90%. Stocks will lead the index over 90% of the time. If we're rational the entire overnight Globex session, resilience is a leading indicator. If we're not rational, it could be one of either. It's infinite choices. It could be leading, lagging, going nowhere, whatever. So today we had an irrational tap pre-market, which made resilience no longer be a leading indicator. So no longer am I using it without taking it with a grain of salt, understanding that it may be lagging. So when I make the trade, I assume it's going against me. I don't assume, well, I'm hoping that it's leading. Yes, that's what I'm hoping for, but I don't assume it's leading. I assume that it's lagging. So I'm looking for a sign to prove that it was lagging to let me get out of the trade. So when I trade in a rational market, I have to take that contrapositive or countering mindset. So in this particular mode, if resilience, because we were irrational, these green line boundaries are irrational. The window of opportunity closes here and closes here. And so I draw them manually, but some of the newer features of Rocket Scooter will actually draw them for you automated. So that's the new stuff that we're going to come through, is create these graphical displays of window of opportunity, which literally is a fancy way of saying Rocket Scooter will automatically turn off the indicators you shouldn't be using when you tell it to. You're going to say, I want to use the rules, window of opportunity. And window of opportunity will say, okay, we're irrational right now below this band, so you no longer use any of these as your trading tools. And it removes them from your screen for you, so that you now no longer are trying to use a tool to rationalize the market when the market is completely not rationalizable. It's irrational. Let's read your guesses, ladies and gentlemen. Tally up the results. Y'all ready? Drum roll. Let's get some rockets, scooters in chat. Let's go. Y'all want to know? Y'all want to know who the first partner? Not only are they coming in as a member of our team, not only, I'm gonna read your rules. Not only are they coming as a member of our team, this is one of multiple folks that'll be joining the Rocket Scooter team in various regards, but this person will own part of Rocket Scooter as an owner and take that desire to make Rocket Scooter as much of their baby as it is mine. So believe me when I say you've gained a second Matt. You've gained another person who will be making shit for you in our platform and building something for our platform with passion, with drive, with ambition, with desire to make another cool thing. That was required for me to merge with somebody, is they would take ownership in this too, in their way, to create something for y'all and to bring the communities together. I read your guesses. Let's tally it up. We've seen people say Black Box, Ripster, Jason Bond. How'd you guess? Ashton Nolan for the teacher, Gergavin Capital. Gergavin would be ridiculous. If I was to partner with Gergavin, we'd have the world's most amazingly fun. Hold on. If I merged with Gergavin, it would be the world's greatest trade room. I love Gergavin. He's a buddy. Oh gosh. But I'd have to therefore type in all capitals, for the rest of my life. All right. Somebody says Wolf Financial, Tradeovate, Ninja Trader. Trades by Matt, Citadel, BlackRock. Yes, I'm going to acquire Citadel. I just happen to find, half $1 trillion in my pocket, and I bought them out. Trading Ticks, Spot Gamut. Ooh, Trading Ticks and Spot Gamut. I like the folks at Trading Ticks. Trading Ticks are awesome. A lot of y'all came from there. Actually, Spot Gamma, that would be one hell of a collaboration with me and Spot Gamma, because Spot Gamma is a very. I always check to say when y'all say how are y'all on Spot Gamma. Spot Gamma would be like cricket and we're like baseball. It's 2 games with somebody throws a ball, you hit the ball, you run in the field. There's people standing in the field. There's one batter at a time. They look similar, like if an alien were visiting planet Earth, they'd look like the same game. But they're obviously very different games, but they are in the same ballpark, the same type of arena as us, where they look at options and try to make validations of the market using options, which to me is the most correct thing one can do. But it's not spot gamma. Oh, that'd be kind of cool. Jim Cramer, Dr. Schultz. Is that the shoe? The shoe inserts? Dr. Scholes? Jerome Powell, Nancy Pelosi. Oh, Dr. Jim Schultz. Oh, yeah, okay. No. Why am I thinking Dr. Scholes? I'm such an idiot. Don't listen to me, y'all. All right. Wolf, all these folks. Okay. Tom Sosnoff, Trades by Matt. Diamond Trade. King Capital. Everybody's pointing their fingers. Kim Carson. Okay. Stephen Harlan. I like his stuff, actually. I follow him on Twitter. He's great. Okay. All right. Drum roll. And I want you guys all to say welcome and say hey to our newest partner of the team. And welcome their community to Rocket Scooter. I want everybody to give a round of applause and pat on the back to Mr. Ashton Noland. Coming in hot. Joining Rocket Scooter today with his entire team. Literally one of the best options brains I've ever known on the planet. Ashton and I both are on a podcast with The Street. That's pretty much how we met. When they kicked that podcast back up, we'll be back on it again. The Street was something, if you guys know The Street, it's Jim Cramer started that company, and they're a media company. They're one of the, financial media groups out there. And they had a podcast they started for their spaces, right? They pulled in 2 really cool industry vets, and they rotated a couple of us in, but the mainstays on the show were myself and Ashton, and Vegas would come on, and sometimes A-Stocks would come on, a few other people would rotate in, but it was Jay Woods and Sarge, Ashton, me, Catherine Ross, and Wolf Financial were the main 6 of that show. It was 2, what I call newbies, right? Ashton and I are the newbies, and Sarge and Jay, everybody knows Sarge and Jay Woods. These guys are floor traders, famous floor traders. You see them on TV. I saw them on TV when I started trading. So to be on a space with 2 industry vets and Ashton and I, they wanted to pull in 2 newer folks and 2 more established folks and kind of have that dichotomy of seeing the market from all different lights. And Ashton and I, we were both talking about VIX and the options volatility futures, right? The volatility futures and volatility options. And so hearing somebody talk about the VIX and using the VIX every day into their stuff made me very, very, very curious when I heard people always talking about the VIX. And we used to have this funny thing that would happen. Oh, hold on. So I started looking into it. I was like, hey, someone else is talking volatility. And the funny thing was, Catherine sometimes would just pick me first to speak, and I'd go into this whole spiel about the VIX. And Ashton would be like, oh, he's like, damn, Matt stole my thunder. I was going to say exactly the same thing. Now I got to come up with something to say. And I was like, I started messaging him. I'm like, oh, I'm sorry, you're going to talk about the VIX. And he's like, oh, I always love the VIX. And I'm always thinking, and you guys know me, the VIX is crucial to my trading strategy. And the stuff he knows about the VIX started teaching me things I didn't know about the VIX. And it was very interesting to see another light of somebody who correctly looks at things in the market. And I started getting intrigued. I started following his stuff. And then every time I looked at something he would teach, especially on Instagram, was always something really neat. So I started showing him monthly maps, right? I was like, hey, check out this thing we're building. He's like, what is Rocket Scare anyways? I started showing him, and immediately he goes, whoa, wait a minute. He's like, you know what I do, right? He's like, I sell options as one of the part of my strategies. And it's like, you have something that's pinpointing where, not only where, but like when in the future I can aim my expirations. Like I can find something in the future, and this is a strike, but what's the risk of the strike in the future? I'm like, yeah, we're making this thing on monthly maps, allow me to map out a swing trade for a month. And I showed it to him, and he's just like, we need combined forces. He's like, I got these ideas. He started showing me some ideas he had for it, and it blew my mind. I was like, you're right. I said, I want you to help me build it. So Ashton's going to help me build monthly maps even further after we build it with his options expertise. So it just made sense. But as the months rolled by and we're on that space, which is very, 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 very impressed. And I've gone, you know, it's very rare for me to hear somebody talk about the market and I'm immediately intrigued and I check it out and it's great stuff. And so we're glad to take him and I together building a massive educational program that's going to branch into options. John, you're going to love it because all stuff you do, right? And John, I'll talk to you after this because I see like, you know, something you can do as, you know, a moderator in this area, like as a leader in the options group. So the idea is that we're going to have Rocket Scooter training. We'll branch off into options, futures, stocks, whatever. And the options courses is stuff that he's creating with Rocket Scooter using monthly maps and other tools and his existing tools blending together. And of course, I have the futures and stocks stuff myself. Dude, I'm so pumped, you guys. Somebody says, am I taking investors? Chase Winshaw. At this time, we are not open. We're not open funding. One of the best things about Rocket Scooter, I must have pumped about $500,000 into building this thing. It all came out of partner pockets. We brought in no outside investors. There's no VC firm, no fund. We literally built a trading platform and paid salaries from my own pockets, from my own trading gains, from my own savings to build this. So we never did a round of seed funding or anything. I'm always open to the idea, you know, but we don't want to lose any control of the company. But as far as like buying a little bite of the company, we might talk about that at some point for people that want to like chunk into like a frag. But we haven't considered it yet. Hold on. You want that Rocket Scooter dividend, baby? Spencer, and also volatility trader, option sellers, your arbitrage ideas. What brought you to check this out, right? And so the neat thing about like those ideas, and one of my favorite Ashton reels came out where he was talking about IV. And he was like, "Did you know?" And he came with this really cool thing that I thought was just so amazing. So one of the things he was talking about was the IV that was built into. Oh, let me turn these on. So the range of a bull zone, he was showing the pricing data inside the range and how there was a distinctively different change in IV from here to here. And then essentially he was looking at the options ladder and saying, you see how this, you can see right here? He goes, this number is exactly where the bull zone ends. It's not a coincidence. I started talking to him about it. Like he naturally sees it the way you need to see it to understand it this way. And I said, that is very cool that you see that. And that was before we talked about fully teaming up. So the idea is that you're seeing things from a different angle from your experience, and that's exactly what we need here. So we're going to be having the most versatile options trading course and understandings using Rocket Scooter as a focus and building specific tools in Rocket Scooter for those of you that do trade options to have even more bang for your buck with the second person building stuff, not just me. I'm also a ball teacher. Option sellers, your arbitrage days are brought to you thinking, well, you should consider, let you know. No control, just invest, pay you, chase once a dividend. Oh, yeah. Well, maybe at some point we can consider a small part. You just want to support the group. You guys are awesome. I love y'all. You saying angels invest value us at 3 to 5 with no revenue? Is RS built on TradingView? We're not built on TradingView. We're built from scratch. React is our environment. We source TradingView for just certain features that we don't want to build from scratch. Now, like building charts from scratch and a DOM from scratch and a watch list from scratch, like the framework that all the data goes into, is common, right? And so whether we spend years building JavaScript type charting in a browser environment to create something, basically it just becomes the equivalent of a TradingView. It made more sense to source it to have charts quickly while we build our actual tools, just so y'all have charts. The only thing that's TradingView is their charting widget, which is just this little frame. And so building charts, since we don't use technical analysis, why would I invest a lot of money to rebuild this from scratch for no reason, since it only functions as an aesthetic purpose to display? So we white labeled some things just to get us going, and then we'll circle back years later when we have a hole in our development schedule. But I mean, we're building all these tools that are all from scratch. All of this is from scratch. The controls, liquidity maps, walls, all of these features are all from scratch. So once we build out our full platform on our own, we're going to circle back and build our own charts from scratch when we have nothing else to do. So to answer your question, Micah, yeah. So are we using the TradingView API? We are not. That's one thing we're not using for anything. Nothing we're using is related to TradingView. All of our APIs are home built, self-built as well. Our server infrastructure is all self-built and maintained. We are 0% related to TradingView other than the fact that you have the shell of their charts. Even our data feeds are on custom APIs. So no connections from TradingView, no APIs in and out of TradingView, nothing TradingView. No TradingView accounts or TradingView data, nothing. We get our data straight from the stock exchanges, the custom API, and we assemble the data on our own servers, and we create our own API to talk to our own platform. So essentially, again, this on the back end to guarantee you, so obviously you were talking about it being an investor, it would somewhat be illegal to lie to investors about the product, right? Since you're not really an investor, you're not taking investment money, but I have to be truthful. So 100%, this is all from scratch, except for the shell widget that has similar functionality. And this is just, we white labeled their chart. And this is also a TradingView chart. Because who wants to build charts from scratch when they're all out there? We're not even charting. Like our stuff is related to not charting. So it's what we call a stopgap in development. It's cheaper to source than it is to build, and tying up our developers to build something that we don't really need. We had triple B bounce on UVXY today, 20.3. Keep that in mind. That's a very bottom left, 20.3. Keep that in mind. That's going to be one of the pivots you need to watch. If you break above it, we go to that, what we call not bull region. Crude, yeah, so. You thought you had to tie into it? Depending on what type of development you are, I don't know if TradingView makes you to tie into it or not. To be honest, I'm not very familiar with TradingView. We just bought their trading library to develop with their tools. So think of it like a junkyard. You go to a junkyard, you can find a car and you can pluck. You need some headlights, you need some tires, you need a trunk, a window. Go grab it from the car and use it. We pay a pretty hefty fee to be able to do that, but I could skip a step whenever I'm making a DOM. Like, who needs to make a DOM from scratch? It's a lot of programming just for a bunch of graphics. So you just snap it in. It makes it easier, right? Because there's no innovation built into a DOM. There's no innovation built in the charts. So if there's something I'm innovating, like a scanner, I'm going to build it from scratch. All this is built from scratch. So trade planner built from scratch, liquidity map built from scratch, portfolio manager built from scratch, our bag tester built from scratch. All that stuff will be the innovation, right? But there's really no way to formulate and remake charts. Plus, TradingView is like the best charting platform on the fucking planet. It's so good at what it does. Flawless. Flawless. So, you know, if we're going to white label something, we're white label the best thing out there for sure. Crude oil, BSD. Oops. Right here. BSC, hedge pressure resistance and somewhat downward trade. I only trade and short off a hedge pressure. It looks like it is falling and there's really no indication that I know what to do from here. Crude oil, again, this is like a sit out day because I don't have any interaction points. So that's basically what's going on. Crude oil is selling. You can do a monthly map on the USO to get yourself a few more features on that. Spencer likes the idea of resilience. It's going to take some convincing me to believe it's tradable. Oh, okay. So Spencer, let me teach you something. If you come today, I promise you something. Do the extended trial if you haven't signed up yet. I actually think you did sign up, didn't you? I'm trying to remember. Yeah, you did grab it. Okay, cool. So remember, qualifiers. The difference between us and anything else is qualifiers. Every single thing says use this under these conditions. And that's it. Let me teach you guys the resilience qualifiers real quick. Resilience is not to be assumed. Hold on a second. I want to screw up my thing here. Okay, so the rational definition of resilience is its arbitrage between the index and the implied rate of hedging. Is it tradable? Absolutely, it's tradable, but under the right conditions. As a matter of fact, resilience is what saved my ass on Friday, even though it was irrational. I couldn't easily rationalize the market. So let me close this down real quick. Hold on a second. Oh my goodness, come on. One second, close. Let me open up my pencil here. I'll teach you when resilience qualifies and when it doesn't. That's the best part. So when you're doing any kind of analysis, my pencil is freezing up. Come on. Okay, there we go. So we have 5 irrational rules and 3 random rules. The rule is, as long as you're not irrational, and you have to learn what all 5 of those are. Irrational means you throw out all rationalizations, okay? So the rational definition of all of our tools, there's always a rational definition. The rational definition, actually I'm going to design Discord to say that, is that resilience, actually the rational definition is that stocks move before the index. Do you agree? So imagine like all things are flat. People are going to buy the index. They think the index is going to go up. People are going to buy stocks. They want the stocks and want the dividends. Traditionally, people are always going to buy stocks first, right? So let me do something really quick. Does that make sense, everyone? So the rationalization is that stocks will lead the market. The stocks will pretty much move first because there's more people buying stocks than going out and buying the index. People are always buying stocks or buying ETFs, so you make them go out and balance and buy stocks, right? Okay, so I'm trying to multitask right now. Give me 2 seconds and I'll continue this. I forgot to retweet the space that I'm in. That'd be a little helpful. Okay. So actually with this new idea, I'm going to type this really quick. And I want you all to sign up for the extended trial real quick. We'll get you immediately into the new training module, and we'll have like a video today as well as a video lesson. We like to do these things on Zoom just to get a little more intimate in teaching and answering questions. YouTube has a little bit of a delay. So, all right. So I'm gonna answer your question very quick. And since I'm inspiring myself, I'm trying to write stuff down before I forget. Resilience. Okay, we're gonna do this. The rational definition, I'm like completely inspiring myself, is that stocks lead the index. Stocks will move first, right? So if rational, market, resilience, designed to lead the market on that premise. If irrational, you can't use the rational definition with confidence. Okay, something like that. So the rational definition is that stocks move before the index. Okay. So to go with that, if any of the irrational things flag just once, even if they flag and unflag, then the rationalization for resilience goes out the door, even if there's a hint at irrational market. And these green DD bands that you see on my chart are that hint today. The fact that I'm not really trading much anymore is because we didn't hit that area. Now on SPY, I have my DD bands right here, and I've actually put these boxes to show you. So the window of opportunity is where markets are irrational. Anytime I'm below these green bands, the market's irrational. Anytime I'm above these green bands, market's irrational. So I'm putting these boxes here just to show where I won't trade. Let me move it where you can see the green line. So far, so good? I'll answer your question in a second, until then. The index is priced efficiently in real time. You would believe so, but here's the thing. There's more to the puzzle. You ready for this? I'm blowing your mind with resilience. Okay. I have to teach you one more thing first. You're 100% right. Can I teach you one more thing that's cool? Okay. So when the market closes and market opens, right? Imagine there's a, I don't know, 200,000 share imbalance at the close of the previous day, and another 200 share imbalance at the close of the previous, at the open of the previous day, next day, sorry. Okay, so market maker is up, and the market maker has bought 400,000 shares against the selling of 400,000 shares, and the market opens like at a spot where they are going to redistribute the 400,000 they had to buy. You understand that so far, Spence? So redistribution zone is an area between where that first share imbalance was and that new share imbalance is, where market makers know there's a burst of buyers and a burst of sellers, or an imbalance of buyers and sellers at a level, right? So redistribution zone is a pivoting area where the market maker redistributes the share imbalance. Does everybody understand so far? I'm teaching a lesson on share imbalances. Does this make sense to you so far? If you understand that, then we can go forward. So at the end of the day, there's something called mark on open orders and mark on closed orders, MOCMO orders. Firms can submit an order and say, market maker, fill me at the close. I don't care. I don't want to be subject to market prices. Fill me at the close. And so the market maker will add all those up, take all the buyers and sellers, match them with each other, and whatever's in the remainder, they must take that other side of that trade. Okay? And when they take that side of that trade, we'll say in this particular instance, I'm looking at SPY. SPY closed here yesterday. Let me pick a different color. It's not blue on top of blue. They closed there and opened here. Well, you know there's a sell imbalance at this exact level because that's where we close the price, right? They close the price where they try to find liquidity, and at that price there ended up being a sell imbalance. A buy imbalance right here. So sellers and buyers. The market maker has a lump of stock they need to get rid of. So if they need to get rid of it, they need to find sellers or buyers, right? So eventually they need to buy buyers on a sell imbalance. Right here at the open. Hold on a second. Okay, so moving forward with the lesson. Is that now there's an implied rate of hedging. So if you believe that the market maker has owning a bunch of shares in their pocket and they need to get rid of them, they need to find sellers. So what do they do to find they need to find buyers. So at the open, they're going to drop the price to find buyers. And if they find them, then they're going to raise price to find sellers. Well, the only proof they have of where sellers were because there's a huge batch of them at the previous day's close. So what you'll see is with any single stock or any single instrument ETF, the market will have very large bursts of volume at the open and close. As a matter of fact, if you observe further, is that when you're at the halfway point between here, imagine that if there's a sell imbalance at the close and a buy imbalance at the open, is this new effect. So sell imbalance, the market makers are on the other side of the trade. They bought. And to hedge their longs, they bought puts. So they longed the market and bought puts here. At the buy imbalance, they shorted the market and bought calls. Okay. So now imagine you have a wall set of calls here and a set of puts there. The market makers have to zero out their trade while they're in that imbalance. So when calls are in the money, the call sellers will long the market to delta hedge. When puts are in the money, the put sellers will short the market to delta hedge. So the middle is like this gigantic equilibrium caused by market maker number 2, is who sold the options to market maker number 1, who filled the imbalance to the traders at the end of the day, you, me, and the funds. So market maker 2 is creating a dynamic where price is balanced in the middle. So the middle is a very strong pivot. Does that make sense? You're in the middle of puts and calls. The net cumulative delta is the highest. So at the end of the day, all of these middle, that's a long-winded answer to say the middle is one of the strongest. The middle and the redistribution zone is one of the strongest high volume, predictable high volume pivots that there is. And you know at the minute the market opens, you're going to prove it to you. Pick anything, and when you touch it, you'll have a volume spike. And this is your proof that resilience is grounded on something good. Anytime you touch this middle and play with it, volume will start to increase. There's your evidence. Give me a random ticker, you'll see it. But go test it for yourself. I'm going to put some random shit in here. But the market close imbalance is greater than the open imbalance. It wouldn't be the middle then. It's the market maker is going to price it based on where they think liquidity is. And the trick is it's not necessarily just related to the imbalance. They have forward-looking understanding of where options, risk, and other things are. They have very complex models to determine where they gap the price to that also include things like market depth, right? If you even want to understand the proof of that, the CME group put out a video on something called the IOP. The IOP is the Globex, the automation part. The Globex is actually in charge, and you can Google this, and there's a fantastic video on futures, how the Globex handles gaps. So when futures market is closed and opens across the Globex session between 5 and 6, there's actually an equation that they use to calculate where they gap to. And a lot of that is based on where people's orders are during the pre-open state, which is like how orders are distributed across the ladder, not just where the imbalances or whatever would be at the close of the trading session before. So the reason I'm saying this is a complex way that they calculate where they gap to. This is not just the imbalance and the imbalance. So what you're saying, if the imbalance is greater, they're using other factors. They factor in a lot of stuff, and we would never know all the factors, right? It's obviously each bank and each firm will have proprietary methods on calculating the maximum liquidity or where buyers can meet the sellers based on that imbalance, right? So the interesting part is, I'm just saying, is that they choose the close and they choose the open to make those fills because they choose them to be the highest liquid spot. The idea is they're anticipating an imbalance. They're going to move the price and close it where they expect the other side of the trade to be, the balancing imbalance. So they choose this to expect it to be liquid, and they choose this to expect it to be liquid. And you can tell because they're on trades on both of those sides. They're hedged on the other side. The other market makers are trading, the seller of options trading. And of course, they did accurately predict, because you will see at the open and close, they're also high volume pivots. Pick any stock, and anytime you tap the middle, the open or close, you will see high volume pivots. So the market makers choose these levels to close the price at. It's not natural. They will quote the bid and ask to meet where they think it's liquid. And so as you're passing through it, there's a volume spike, it's parabolic. As you're touching the middle, there's a volume spike, it's parabolic. This is the thing that blows people's minds. They go, holy shit, this is right. When you interact and pass through it, there's a parabolic volume spike. When you interact and pass through it, there's a parabolic volume spike. When you interact and pass through it and tap this in, parabolic volume spike. You can't argue with that. Pick anything, it does it. So all it does is a long-winded answer to prove to you that this is a pivot, this is a pivot, and this is a pivot. That's it. Predictable high volume. And all that's happening there is it's a long-winded answer of these option sellers are pushing it this way. The market makers are trying to find sellers and find buyers by trading inside of there. So you're going to see a lot of pivoting action between these. In the middle is going to be high delta from those option sellers, delta hedging. So for different reasons, this is a pivot, this is a pivot, and this is a pivot. But you see all examples right here. I mean, here you go. I just picked random stocks. There's Goldman Sachs right there. There's Goldman Sachs right there, and there's Goldman Sachs. Have I at least sold you on this idea, Spence? So far, so good. These are the highest volume pivots usually on the map of the day. Okay, cool. So now when you're saying, okay, in an irrational sense, the index, as you said, accurately prices in real time with the stocks. You nailed it. But what resilience does is the rate of implied hedging, which will tell you this. There is a thing that says when that delta is tipped slightly one way or the other, I'll let you answer the question. When market makers are lowering the bid or lowering prices or lowering the ask as well, what are they looking for? You lower, and just imagine like a general auction. You lower prices to do what? What are you looking for if you own something and you're lowering the price? You're looking for liquidity. So if you're lowering price, you're typically looking for what? So you can guess that one. Buyers, yeah, and you're raising price, you're looking for sellers. Okay, so if the middle is a delta balance and you're raising price, as you just said, you're looking for sellers. So with what I just went through this entire example, if you were a market maker and you walked up to this day and you had all this information right here in front of you, you had a sell close imbalance, okay? And the market is at a delta balance and tipping a little bit higher. You just said they're looking for sellers. Where is your evidence of the highest batch of sellers that exist on this map based on the evidence you have? I mean, you are the market maker. You know where the sellers are. They sold to you at this level where you closed the price yesterday. That's a 200,000 share imbalance. You know there were sellers there. So there's evidence there's sellers there. So if you're raising the price, wouldn't you navigate to look for sellers where you know they are? Which as a market maker would be your break-even price because you bought there. So if you're proven that they're looking for sellers because in real time, there's more buyers than sellers, then you have a chance to escape your trade flat because you took the sell imbalance right here, didn't you, as a market maker? Do you understand that, Spencer? This is all the mechanics of resilience. You guys don't have to understand this to trade it. But it's just to prove to you that we're not repackaging a bullshit MACD with different colors. So the principle is if there's a sell imbalance to the market, everyone's sold to the market maker. So the market maker is long that 200K in that example here. So they're upside down in the shares, even though they're hedged with those options. When they get right here, they can flat out their position at no loss if they're looking for sellers. Yeah, they want to find buyers and sellers, but they're listening to what we're doing today. If the market's pivoting and we're starting to buy in excess of the sellers now, just now, like randomly now, then they're going to look for sellers. They know they're going to find the delta hedgers of the options world there, and they know they're going to find likely additional sellers there. As people decided to short from that level, they know that somewhere in here, people are likely probably willing to short again. It's that whole volume distribution understanding, right? If you had proven sellers very near term yesterday, then there's an evidence. Let's go back there and see if people are still selling. It's a very logical choice. So the point is that resilience is the rate of implied hedging. If you are tipping the scale above the halfway point and looking for sellers, then you're going to assume that it's going to go right to there to find them. because that's your next high volume pivot. I proved to you these are high volume pivots. So you're looking for liquidity. That's what high volume pivot means. There was your liquidity. The Goldman Sachs example, there was a spike there, a spike there, and spike there. So if you're trying to find buyers or sellers, you're going to move to where you can predict there will be volume, right? That's exactly what you're trying to do. And so the idea is that let's pull up what the S&P is now tracking the stocks. Now, this is the magic. I haven't even talked about resilience yet. You ready? This is what resilience actually does. There you go, Spencer. Okay, ready? You nailed it. Well, you're there. You're like literally like you're peeking in the window. Okay. So if Apple is here and Apple trades there, then our algorithm assumes Apple's next move is to there. It's the move that hasn't happened yet. Resilience is designed to be a leading indicator because it's adding up the moves that haven't happened yet to complete the picture. And so res is the sum of the implied moves that haven't happened yet, weighed by market cap. It's fucking brilliant because it's by design a leading indicator. Because if Apple is passing through its half gap, they're looking for sellers. So we know that Apple has a distance it will likely go to find those sellers. In real time, we know the amount of market cap the S&P should gain if all stocks in a snap of a finger were to complete their hedge to the edges. You know that Apple needs sellers because you're on the other side of half gap. You raise price to look for sellers, Spencer. You answered it yourself. You lower price to look for buyers. So if you're at what's typically a delta maximum or a balance point in the middle, market makers don't like to leave a liquid spot because they make money on every trade that's made. They make maker-taker fees on every trade. They'll hold a balance spot forever. So if price is moving higher, you must assume that there's an instantaneous imbalance of buyers and sellers because price is going higher. If there's, in that moment in time, more buyers and sellers, that's why it's going up. So then they're going to look for sellers, and that's the next visible window where sellers are. How do they know? Because literally they have a stack of papers that are market on close orders that were selling in that imbalance, and the market maker had to be the buyer at exactly here. They're like, oh shit, yesterday there were sellers at exactly that level. Well, there's a buy imbalance now. Let's move buyers and sellers to smash into each other. It's the constant search for liquidity. So when I came up with this idea, I said, well, if we're always pivoting between open and close, which is it's a traditional thing, right? And even in technical trading, people that are trade technicals don't understand this to the fullest, but this is exactly what you're kind of doing, right? If you ever looked at candle theory and the market, like say this is a red candle, I'm gonna do this. And then we gap down and price is trading. You're always looking for gap fills as a point of resistance, right? Because the sell imbalance is what caused that. And if there are new buyers, you're going to find the sellers where that sell imbalance was. That's why gaps were even a thing, because those sell imbalances are big bursts of buyers and sellers. So you know that you're going to pivot to find them if you're looking for them again. So if you sum up moves that haven't happened yet, that's the beauty of resilience. Is that resilience is saying, like, if Apple's trading there and Meta's trading there and Goldman Sachs is trading there, then there's an amount of market cap the S&P should gain, have this complete its move instantaneously if that completes its move and that completes its move. So it's the sum of all the moves that haven't happened yet in all the stocks. And that's what this is. The sum of all the moves that haven't happened yet is negative, which means the majority of stocks are doing this, and the majority of market cap is doing that rather than doing that. So as you see, Apple pushing towards its lower boundary, Amazon pushing towards lower boundary, like the sum of market cap. So if you were to take the S&P and the sum of stocks, resilience is like, okay, one's moving faster than the other. So to circle all the way back. Oh, shoot. Oops, let me turn that whiteboard off. That's weird. Sorry about that. I'm gonna blind all you guys. I must hit whiteboard on Epic Pen. So back to rationality. If the rational definition is that stocks lead the index, and your thing that you said is correct, and the index prices in quickly, which I agree, then if all 500 of your companies are here and one of them starts moving and all the other ones are flat, it has to do with everything's flat, and somebody walks up to the stock market with money and says, I want to buy Apple stock. So Apple stock will go up, and then effectively the SPY will go up a certain amount to reflect that. You wouldn't know until that person bought Apple. Then the index would immediately price it in because it's an equation, right? But there's a time before the stocks move and the index moves, and then the ETF, which is, I'll be calling the space 1 second. For now, I was kind of looking at, I was talking about just the index in general. I honestly see that today is still kind of a down day. Apple's sitting a resistance on my screen right now, looking at about 150. So just to answer your question about resilience, as you'll see, is that, they called me on the podcast to speak, so I had to pause really quick. So the idea is, and the rational explanation is, if stocks lead the index, because people are going to buy the stocks, the index is going to move and the index product is going to move. They're all going to kind of move at the same time, but the index product is its own tradable thing. People are buying and selling the stocks while people are buying and selling the index. They will sometimes deviate for periods of seconds to hours. At the end of last Friday, people were getting squeezed out of whatever, and they're going to cover their index products before people buy the stocks. Maybe if you're in a short squeeze, you're going to have to dump the SPY shorts you have, which means you're covering, but you're not out there buying the stock. So the index will move and maybe move faster, right? The mechanics means they'll separate a little bit. So this is showing the separation. This is showing that relative where we are, the index is overpriced relative to the stocks. The fact that resilience is not at zero all the time indicates that there's a stretch. I mean, this is showing that the index is overpriced relative to the market cap of the stocks. So resilience is negative, the index is overpriced relative. So the assumption is that as long as markets are rational, you assume this is because the stocks have moved first. And it wouldn't behoove you to see that Apple has moved outside of that range first before SPY has. And that is the rationalization. And right now, currently markets are rational as we are inside the window of opportunity. So in a rational market, you can assume that the index is moving behind the stocks. So the index is still within the zone and some of the bigger stocks aren't. And so this is proving to you that the stocks have moved first, as the theory goes. I don't trade the Dow Jones, YT. But you can watch it in the Rockseeker platform. So the application is, as long as you are in a rational market, the rational explanation is that stocks will likely move first as long as people aren't getting squeezed. When people get squeezed, they're going to dump random stuff, and you don't know what they're going to dump. As Friday proved, they closed their index shorts faster than they were buying the stocks, is what we saw. And so when markets are irrational, you don't assume it's leading, lagging, nothing. You can't tell. It's like the rock goes up, it may not come down. And that's what that explanation is. So this is telling me the index is overpriced relative to the stocks. So either the stocks are going to rally to catch up, or the index is going to sell to catch up. When the index and stocks are in harmony and equilibrium, this is at zero. So right now, the index needs to come down or the stocks need to go up for it to meet. That's what it means. So when we're rational, because I assume that the stocks have moved first, then I take the bet the index will move second. The index product, not the index, the index product. SPY resilience, I use this against SPY half gap. So if you're in the middle and resilience is less than zero and you're rational, the pivot is from here to here. That's the application. If you're in the middle and SPY is rational, the pivot is from there to there. And resilience is greater than zero. That's it. It's that simple. This entire explanation was just to prove to you that it's not fluff. But you can observe and monitor it every day. But must, and I'm going to close out on this, must be rational. Or that the probability of the index moving second, you can't determine. You can't determine which one's moving first. In a rational market, Titanic is sinking, and you don't know what people are going to cover and squeeze out first. It's random. Does that make all the sense in the world? Sensor says, okay, so predicated on the idea that if we're above the center, they're looking for sellers. 100%, that is predicated. That is exactly the basis for the resilience indicator. The basis is if you're at the middle and price goes above, then that instrument is going to look for its own close. SPY has its own open and close, or if you're below, it's going to look for the open, or vice versa. It's going to look for the pivot wherever open or close is. And because simultaneously, right, so the two qualifiers are that half gap of anything pivots to open or close to find liquidity. And I proved that to you with the volume spikes. Number two is that, and observationally, you'll see this if you want to just observationally see this, but I explained it to you with that delta balance, is that from, is that at half gap, market is in equilibrium, delta equilibrium, because of the sellers of the options. So therefore what you said, if you pivot above half gap, then the market's out of equilibrium. And you pivot below half gap, the market's out of equilibrium. Therefore, to find equilibrium or liquidity, again, you're going to look for where buyers and sellers will be, which is to show that the high volume pivots will be where you go. So therefore, that half gap pivots to open and close is because equilibrium is found in inequality. It's looking for the other side of the trade. It's going to find at least something there. It's the first stop it goes. And then, as you said, this is pure arbitrage of the index. Now, what makes resilience powerful is not knowing that this is negative. It's knowing that in a rational market, observationally, and you can go test it yourself, if our 5 rules are rational for the day, it's like we've been between 97 and 99% stocks move first. And that does make sense rationally. Because your 401k, which is the majority of the investment in the stock market by human beings in general, you're buying ETFs. And what are those issuers of those ETFs buying? Stocks. You could buy your Vanguard this, your low cap that, your whatever. You click the slider on your T. Rowe Price account to a moderate risk account. You're buying some ETF or something that represents like 80, 90, 100 stocks, right? And you read the prospectus on it. They're going to go out there and accumulate those stocks on your behalf and sell you one instrument of an ETF, right? So most of the time, a rational market is fueled by people purchasing stocks. Another reason stocks will move first, just besides people buying in their ETFs, is that most human beings, their first exposure to the stock market is a stock. Nobody goes in and go, ooh, I want to buy this thing called SPY. First time I heard of SPY, I'm like, what the hell is a SPY? But I know what an Apple stock is. So even newbies will trickle in the market and flood liquidity in just buying stocks or buying stock options, right? And the highest traded thing right now is options. Options is the most popular thing to trade. And so all of you YOLO traders out there buying Apple puts and Tesla calls and whatever are forcing market makers to go out there and buy Apple and Tesla shares. So even the most of all the pie chart of what people are trading, I think right now, like retail traders, like 60-70% of them are options traders now. That's the huge, most popular thing since COVID. So options traders are forcing most of the liquidity in the stocks as well before the index. So the index isn't going to move before the stocks do unless people are getting squeezed. And those are the rationale that we came from observation. When the index moves before the stocks, we recognize that happens more often than not when one of our rational flags have triggered. Would you say, okay, well, why would the index move if the stock market's nice and flat? Why are people dumping the index? Well, maybe they see some risk, some model, and they need to get out of something, or maybe they're in a short squeeze. Well, then you say, okay, it's easier to dump one product that represents all than to focus on selling 80 different stocks that are part of your ETF. So if Vanguard ETF is about to crash and they're like, oh crap, we need to short something, you're going to have to staff 10, 20 traders to go short all these different things strategically, or just short the SPY to catch it in one gulp. It's easier to get squeezed or to hedge in one instrument that's a catch-all during a period of panic than it is to rationalize 80 or 100 things in a panic. So the rationalization is when stock markets are crazy, you might usually see the index move first. But even so, they may have an algorithm that dumps all the stocks too. Because you can't know, you don't rationalize. And so rational markets, you don't determine. But in a rational market, stocks move first almost 99% of days. It's fantastic. So to circle back, if rational, then 99% of the time, give or take, if rational, if resilience is less than 0, then inside the band, that's the pivot. If resilience is above 0, inside the band, that's the pivot on the SPY. And if you're outside of this, mode 2 is the open or close is support. If you're outside of this, that's resistance. And that's it. Resilience has 2 modes. It's from here to here, here to here. This is where I scalp. And that I scalp from here to here and here to here. Based on resilience as long as it's rational. That's it. Now, there's a recent observation that we've had in Rocket. Again, all this stuff's going to be automated when we're done. It's the best part. Like, it would turn it off if it wasn't rational. Now, what we found, which is a thing that we've discovered this year, Is that what happens if you are irrational and jump back in? This is enough. This right here, and even opening outside of the band in futures is enough to trigger irrational for resilience all day long, unfortunately. So while I did use resilience, I took it with a grain of salt. And if it was close to zero, I wouldn't have made that trade. But because it's very negative, I took the bet that, okay, that's pretty bad, so I'll take the bet. But you see how I didn't hold it for the bigger short, because again, the index is moving before the stocks right now, and that's typically what happens when irrational is people are getting squeezed. Again, more shorts are covering getting squeezed. I'm not going to take this bet with a lot of power that we resist from here to here, because this happened once. The qualifier is that if you're irrational even once on any of the 5 rules, then resilience loses its edge, and you just don't use it. If you have to use it like I did, or you want to use it anyways, then I use a very small position, which is why instead of 11, I only did 3. So when my confidence is gone, I'll still make the trade, but with something very small. And that's it, Spencer. So today, if I wanted to short from here to here, because this is here, I could say, okay, but because this happened 2 times, the market hasn't been stable all day. It had a hint of instability. So I'm talking small risk. It's a great trade to make from here to here, but very small risk, like 1 contract. No, irrational has nothing to do with resilience. Irrational is 5 other things that we use. 5 other things that show that the stock market is behaving outside of its normal bounds. Typically margin calls, like we're detecting margin calls different ways, where people are panicking and doing weird stuff. Over hedging, margin calls, things like that. All 5 irrational signals come from irrational hedging and margin calls. We can detect those things. So if you think of like unusual activity, we're predicting unusual activity before it happens. And it's typically those kind of random things that humans would do. So it's not when you believe, when you believe it's leading the index and all signs are rational. If everything was rational all day today, I'd be going in to my full max position size, shorting 11 micros from here to here right now, every single time it touches. But since this happened, there's a caution on my trade, because I like to maintain a high win rate. I don't like to take a lot of risks. So if I do want to take that short from here, right? And you can see that NASDAQ is not necessarily being all super good. NASDAQ's actually positive. So again, we can't assume the stock's leading the index. NASDAQ might move to here, but I do expect high volume pivots at close. So right now, if I want to take a second scalp just to have a little fun, when NASDAQ hits this upper band, I'm going to short it from here to here just because SPY looks bad. So I'm making like justifications where the irrational market has me not really want to take big bets. I'm going to short 1 micro from here to here just to make a trade, as an example. Hold on. Okay, so the rationalizations for and resilience, there's two of them. Stocks lead the index. Stocks will be first. And the other one is the S&P leads the NASDAQ because it's more diversified. It's a bigger representation. Of the entirety of money flowing into the stock market or out. So because the market was or is irrational at some point, I can't believe strongly into this rationalization. I can't believe that stocks are leading the index, and I can't believe that the S&P is leading the NASDAQ. But if I do want to take that bet because S&P usually leads the NASDAQ and it's bad because I can't rationalize it with a lot of confidence, I'm going to bet really small at the boundary. Do we got it? Yeah, take the 3-month extended trial and you will learn all this, I promise. This is like 1-day crash course in res. You're going to like it, I promise. All right. Yeah, the irrational rules are basically our strongest things we do bring to the table, not just pivoting rules. But when markets are rational, believe it or not, you throw out everything. If these moving averages are designed when they cross over, that MACD crosses over is my buy signal. Because you believe when they cross over markets reverse, that's a rationalization. When irrational, don't do that either. You turn off all your indicators. The future versions of Rocket Scooter will literally turn stuff off when irrational. If you click rule assist, it will forcibly turn them off so you don't use them. Based on the rules you tell it. I don't want to trade when irrational. Okay, it's going to remind you, by the way, you're like, where's my indicators today? Oh, shit, it's irrational. Rosker says don't use them. Don't rationalize them. Or you can program rule assist to tell you to trade small. And it will remind you in your alerts, hey, by the way, you told yourself you're going to trade small. You go, I'm going to short 10 contracts, and you said, I'm only going to short 1 when irrational. A warning will pop up and said, hey, you remember your rule? You said you're going to play small when irrational. Are you sure? The rule assist will allow you to program rules of confidence like that so that it'll interrupt your trading decision based on a rule you tell it to remind you not to break your own rules. That's how we're revolutionizing the trading game and trading platform. Literally programmable rules that you can put in when we're done that not only turn off your indicators when irrational for the rule that you create, or the rules will hand them to you. We'll hand you some rules too, pre-programmed rules if you want, or make your own. Or you could say, I'm going to bet big when rational, bet small when not. And if you tied in like your futures account and you're trading with it, and I tell it, my futures account, I'm going to trade based on this rule. Net lick divided by margin requirement. It says, okay, your max position is 10. And I can say, what's your small position when irrational? And I'll say, I want it to be 1. I'll tell it, these are my rules. And if irrational and I start going greater than 1, it will remind me, just in case I overlooked it, hey, by the way, it's irrational. And you told me you don't want to trade Matt. So you told me, Matt, you don't want to trade anything more than 1 when irrational. Are you sure you want to send this order? Like that. That's what we want to make. So you don't have to track all these things and watch 10 million things at once. Program your rules and then remind yourself of your own rules. And that's what we kind of have been dreaming of making all these years. Rule-based, where you can program your own rules, and the platform literally turns off indicators, which none of them do that. And the platform also interrupts your trade based on rules you told it, which no platform does that as well. They just let you freely go in and waste your money. That's your modern trading platform. No, you can't program any rules unless you go write the code yourself. But good luck finding a trading platform, writing some rules that put a pop-up on your screen that you told yourself, hey, by the way, buddy, remember you told me, you're talking to yourself. You say, remember self, past self, you told me don't trade so heavy in this environment. So that's where we're going. Okay. We love you guys. 8-day streak. Market's still going. We're killing it. So you guys to check out and join the Discord. We're going to immediately pivot into a Zoom call. I might take this NASDAQ short off of the top of the redistribution zone. I do like it. We'll see. I'm not really sure. But if I do, it's going to be a small position. Clearly irrational. So I'm going to take a look at it and see if the S&P does gain some momentum or not. But other than that, I'm probably just going to chill for, let's say we're going to do an educational session. We're just gonna all come to the Discord. We're going to give you guys some educational lessons and kind of go over all the new plans and new setups. And like I said, give Rocket Scooter a try. Extended trial, 3 months, $35 a month for $200 package, $600 value. And you can lock in the half price rate for the rest of your life at month 4 going beyond. We'd love for y'all to check it out. Again, give it a shot. $35 is practically nothing to spend on something. It's 3 months of education for a total of just about $100. We love y'all, and we will see y'all later. Goodbye.